evening, everyone. Yeah, welcome to the webinar. So I am Arpat, handling the. I'm in the chief commercial officer in Trade Fintech company, Trade Fintech Private Limited. Uh, I'm having more than 5 to 6 years of experience in trade and finance. Our company is into the trade finance, like into the marketplace. So it's the one of a kind of a marketplace where it's bringing all the partners together in a single trade, whether it is a bank, exporter, importer, shipper, insurer, and everyone. And we are quite active with the trade finance. Our topic for today to conduct the webinar is the current market trends, digitalization of trade finance marketplace and its instrument, and future technology in trade and supply chain finance. And our speaker for today is Swati Panji. She has experience of more than 20 years in trade finance. And out of the 20 years, 12 years into the major bank, have worked in various domains in the trade finance, and she has a specialization in trade finance for last 20 years. So we'll start with the webinar. Hi Swati.
Hi Arpit, thank you for inviting me.
Yeah. So Swati, we currently want to understand about the outlook of trade finance and trade finance marketplace. What do you look at it?
Trade finance, and basically in India's counterpart, then India's trade finance market estimated in 2022 is $2.75 billion, but is expected to reach $3.88 billion somewhere around by 2027. And we can see that there are a lot of initiatives that are taken by government. It all started with Make in India, and then there are a series of initiatives that have been recently taken by government, which are something that are there to boost the exports market. But having said that, if we are talking about the outlook on the trade finance and trade finance market instrument, I just like to go basically into a brief of it, that trade finance is actually an umbrella term which includes a lot of financial instruments, but traditionally people are just aware about two instruments, that is letter of credit and bank guarantee. But it also includes the new age financial tools like purchase orders, stock or warehouse financing, commodity financing, invoice, that is we say, invoice domestic discounting and factoring, payable finance, bond. So basically, since the traditional finance usually looks at the balance sheets and the collaterals that are available with the customers, but trade finance basically looks or majorly looks into how strong is the volume. It's volume based. How good is the order book with the customer that is available, and hence it helps in growing by guaranteeing or providing finance to help them buy or sell goods, also giving the clarifications or the confirmations about the credibility of the party. Sorry. Also, as you can see that in the past, because of the COVID, there has been a lot of issues with the reference to the supply chain. There were constraints in the supply chain, the logistics was not available. So in order to mitigate all this supply chain issues also, trade finance has come up with quite a lot of innovative solutions. So the outlook is that moving from the traditional finance, it is moving towards a more innovative finance, and it is not going only to be the banks who are going to be financing it, but then there are a lot of competitions which are arising in the terms of fintechs, marketplace aggregators, and the NBFCs.
What are the kind of challenges and forecasts do you see for the trade finance market? And its
as I told you, that forecast of the trade finance market, I've already told you that it is estimated somewhere around 3.88 billions by 2027. But after COVID, it was thought that there is going to be a robust growth in the India's trade finance scenario, in the trade scenario. Even the forecast was very strong. But unforeseen situations like Ukraine happened. The global recession came because after COVID, things were moving up, and then suddenly this. Ukraine situation came. So there has been a recession risk that is being seen. The inflation is high. At the same time, if you can see that the dollar against rupee is also in a very downward trend. So, despite of all this that has gripped the financial market, the India's growth prospects remains very strong and resilient. And despite this headwinds of geopolitical developments because of this Ukraine and Russia war, elevated crude prices, tighter external financial conditions, high frequencies, several sectors are also facing problems. The rupees tend to be a bit weak for a very short time, but still there's a lot of growth prospects that are there, which is being seen or foreseen. Now, if we go to the different parameters in the challenges and the prospects or the opportunities that we see in the trade finance market. So recently there have been quite a lot of trade finance agreements that have been signed by the government. So one with the Europe is already in the pipeline, so that will increase the competitiveness of the Indian exporters in the international market. Also, the banks and financial agencies are enhancing their trade finance or facilitation programs. Digitization is playing a huge role. If you see, a lot of banks are coming up with digitization solutions. They are coming up with tie-ups with a lot of fintechs who are at the back end providing a digitization solutions for the trade finance.
How do you see that like there is a change in the traditional approach of the instruments, like the traditional way of banking? How do you see the shift in the MSME sector and the normal exporters importers, where they are come tying up with fintechs and all, like and coming up with the new, joining with the new banks or new trade finance platform? How do you see the shift, like from like now we are seeing that there's a slight change from normal traditional banking? So what is your experience into it, and how do you see?
If we see that traditionally banks had a very prominent role in providing the finance to the customers, and as I initially said, the finances is more of a balance sheet strength driven and the collateral driven. But with the competition that are coming with different platforms, fintech companies, NBFCs, it's opening up a market because they are looking at how good is the MSME in their working, the product they're offering, their order book, rather than the strength of the balance sheet. So that is something which is really giving the new edge finance. Now, in order to substantiate and support it, government has also come up with a very good policies, two good policies. One is the amendments that they have made, series of amendments that they have made to the Factoring Act 211, and also the platform of RXL or trades as we know it, which is there basically to facilitate MSMEs who we all know are the growth engines, but they are short of collateral. So the platform like trades or the factoring agencies or supply chain finance, they are basically financing the invoices backed by the insurance, credit insurance, which facilitates them that they can avail the finance from this alternative agencies without having any collateral, security of their finance, and they can grow their business by leaps and bounds.
How do you see the opportunity of factoring, where the most of the MSMEs, like 40% of the MSMEs, are supplying to the developed countries? So how do you see the opportunity in next coming days about the, especially towards the invoice discounting or the factoring?
So you're talking basically about the exports market.
Yeah, right.
Yeah, so see, factoring, as I told you, has not been so very prevalent or prominent or known instrument in India. People are still waking up to it because they were not aware about the benefits of factoring. But after there are numerous amendments to this Factoring Act and the government coming up with the upgradations in the trades platform, I see factoring playing a very important role in the coming time to facilitate exports for the MSME sectors. Because quite a lot of factoring agencies are coming up. They are setting up their offices in India. And they are coming up with quite a lot of knowledge-based engagement with the MSMEs. So I think there's a lot of future for the factoring to take place. Also, I would say that factoring is not only limited to exports market. It has
Right,
also started taking place in the domestic market also,
right.
because India is basically, along with the exports, a domestically driven market.
Right. Export X compared to the GDP export is quite less compared to the
Less,
GDP.
yes. So the domestic consumption is also being taken care, and factoring is playing a major role both in the domestic as well as in the exports market.
Do you see that the recent changes, like you said, the Factoring Amendment Act and the IRDA changes in the insurance coming up with? So, do you see that there is a big opportunity coming up for the exporters and the fintech?
Yes, because see, we see traditionally the banks have always been more lenient towards the larger corporates. They are more into the rating-based criteria, and they are more towards the good rated customers. But factoring is something which basically, as I told you, looks after the strength of the customer to which an exporter is selling to. So it's more driven by the purchaser's strength rather than the seller's strength, and the strong order book that the MSME will have, that will help them to increase their business, and factoring is facilitating it. Earlier, I suppose Factoring Act of India, or majorly RBI, had this clause in the Factoring Act whereby they say that only the NBFCs of fintech registered with RBI can go ahead and do the factoring. But now, in order to facilitate it, even RBI has removed this particular clause that they should be registered with RBI. So RBI as a regulatory body is also giving a boost that the NBFC fintech does not need to be registered with them in order to go ahead for factoring services.
Do you see that any big changes in coming towards the LC discounting or the invoice discounting? Normally, an exporter has to visit to a branch, doing whole paperwork on physical. Do you see this coming up whole together into a digital way?
See, if we talk about LC discounting, so there was a recent report which was issued, and some survey was conducted where it was observed that the LC prominence of LC was going a bit low for the G7 countries. Maybe the economical fallout of Sri Lanka could be one of the reasons, whereby because the economy went down, the LCs that were issued did not have much of a prevalence or relevance, because it came into a weak economy. So whatever LCs were issued by the Sri Lankan banks did not hold any value, because the economic status of the country itself went into negative. Whereas for invoice discounting, such aspects doesn't come, because over here you are looking at the credit worthiness of the buyer, and it is backed by credit insurance. So in case of any such fallouts, they are there to safeguard the interest of the seller, whereas LCs in such scenarios will not. So LCs majorly will have a prevalence with the strong economy, where there is a strong economy, strong backing of the banks. So then the LC could fulfill the purpose of security of the payment as well as a good discounting opportunity. But for the developing nations, where there is some sort of a challenge with the economy, it is more of an invoice discounting.
Correct. There has been recent development regarding the rupee domain, like rupee LC discounting, or what's your view on it?
Rupee LC discounting, or maybe you must be referring to the recent RBI circular that has been issued for the INR denominated transactions.
Yeah.
So basically, because as I told you that since quite decades, US dollar always has been a reserve currencies, where all the economies are transacting based on the US dollars itself, where US dollar is the one reference point in doing the transactions, and it has hold a lot of prominence But looking at the recent issues with Sri Lanka or with Russia because of the Ukraine war, quite a lot of transactions or trade had come to a standstill. If we look at the transactions there with Iran,
Right.
there's a lot of potentials for the pharma companies and the chemical companies for Iran itself. But because of the sanctions and the US dollars, quite a lot of our companies are not able to sell the goods to Iran. So I suppose the move that has been made for the international trade settlement in Indian rupees by RBI is in order to promote INR as an international currency. So the international trade would obviously help by promoting exports and facilitate trade with countries under sanction. We can also pay our oil purchases in rupee rather than the dollar.
Right, right.
But having said that, there are quite a lot of regulations and clarifications that are still awaited from RBI, because FTP, which has been delayed for the renewal because of the COVID, is due for renewal. So everybody is thinking that maybe some sort of a clarifications or detailing will be there in the FTP policy, or maybe a separate policy regulations will be given through FTP, through separate regulations for the INR denominated trade. But this is just a move in order to replace US dollars dominance against US dollars. So
Okay.
I think that maybe it will take some time for things to be replaced, the US dollar to be replaced by the home currency, that's INR.
Right, right. Currently, in terms of the rate hikes have been going on, and like the Fed is also increasing the rate hike. The European banks are also raising the rate hike and all, like, and Indian bank, like the central RBI will do the same. What do you see the opportunity for the NBFCs coming up, where the competition has been will narrow down, or like what?
See, because looking at the market movement, where if we see US dollar and euro is also almost come neck to neck with each other. Obviously, rupee has far innovation and the digitizations of the product that they are going to give, because banks being a huge entity, it takes them time in order to innovate and come up with the asset light products or the solutions, whereas NBFCs and fintechs, they are a small operations unit and they can come up or they can adapt with the changes quite quickly in comparisons to the large banks.
So how revolutionized, like how you are seeing that the changes in the trade coming up, the fintechs and all, will change the whole trade finance market or marketplace, like how it will change the whole dynamics?
I suppose that the advent of the NBFCs and fintechs into the trade finance market will only increase the competition. But at the same time, it will also increase the access of the finance to the MSMEs and the people who want to grow, because the market reach of the people who are not able to get the finance in order to grow will increase. So I suppose the marketplace of fintech, the NBFCs, the advent or the more and more that they are entering into the market is going to increase the availability of different options of financing available to the customers.
Sure. Since you have quite good experience in the trade finance sector, like in the working capital, and what are your views in the pre-COVID and post-COVID market? Like how the market has changed after the COVID, like post-COVID, like any insight, any experience of yours into the
See,
pre.
pre-COVID to post-COVID, the major change that I would see is people do want to go ahead and do the exports, but I very distinctly remember one thing that happened during the COVID was the goods were manufactured, the documents were ready, but because of the transportations of courier not happening, people the trade came to a standstill. Some of the goods were lying in the port and the documents had not reached, so it was very difficult for people to release the goods. So the trade was going, but the documentations, the movement of the documentations had a huge problem. So the major change that I see is that traditionally, if we look at the regular banking transactions, the checks have been replaced by RTGS and EFT. People were very quick to adapt to the paperless transactions like RTGS, NEFT, and all. But in trade, we are basically and always denominated by the paper. We always rely so much on the physical paper. So I suppose COVID is one such opportunity. COVID has created one such opportunity whereby the requirement or the necessity of digitizations in trade finance is increased. So trade finance need to be digitized.
How do you see the blockchain involvement in the trade finance? Is it revolutionary? Like, how do you see it?
I see blockchain as a necessity for trade finance digitization. And if we look at the recent movements, Unitrail has already drafted electronic documentations. If I remember clearly, Singapore has also signed up with them for this EBL and e-documentations. And if we just, I suppose in February, Singapore became the second company globally to adapt to the Unitrail model of electronic transferable records. Also, G7 has pledged in May 2020 proof of concept with some of the banks where they have started this LC for on a blockchain. So they've already started with the sandbox sort of an approach, because they also want a blockchain technology, underlying technology, to be there to digitize trade finance. But the only challenge, or maybe the only thing that is hindering, is all the stakeholders on the same platform, like the customs, the shipping, there's the logistics, the insurance. Everybody has to be on the same platform.
Right.
But blockchain is the future. It has to be there. Everybody will have to adapt sooner or later to the blockchain.
And how will this MSME will adapt to the new changes, like the digitalization, which where most of the MSMEs are not into like having a current account, or like they are not very vulnerable to the online platform offered by the banks. How challenging you see to setting in the whole trade?
See, I beg to differ with you with this, that MSMEs are quite adaptable to the technology. They have current accounts. They've also started using technology, internet banking and everything. But yes, adapting to this technologies as of now, because it's a new advent, it's costly for them to get onboarded on this blockchain technology, because the more it is spreaded, the more it is adapted by all, the more cheaper and more accessible it will be with everyone. So as I told you, if all the agencies are onboarded on this blockchain platform, the accessibility to all, including the MSMEs, will be very easy, and then I don't think it will be impossible for them to be onboarded. The only thing is the accessibility, the availability. If we see as of now, large corporates, most of the large corporates are only not there on the blockchain.
Right.
So first of all,
I will ask that, like, how do you conclude the whole trade finance marketplace digitalization with the current scenario? Like, how do you conclude like the everything, like the new changes, policy, getting up the fintechs and all? Like, how do you see in a current scenario? What do you see the opportunities in the current scenario?
So the opportunity in the current scenario I see is there's a lot of growth prospects with obviously assistance from the government, also with the new schemes that they are coming up with to promote exports and to get MSME into the fold of the exports also. So they are promoting MSMEs to start or to get involved into the exports. But what I see is government is putting in a lot of efforts with this policies like Tejas. the change in the Factoring Amendment Act, the digitization, the blockchain, CBDC, that is the digital currency, that is also they are planning to come up with. So I suppose they are seeing India as an INR currency as a dominant factor in the international trade, as one of the dominant currency, and the people to adapt to the digitizations and the alternate finances that are available, moving from the traditional finance.
Right.